We've all seen many people who were interested in earning passive incomes in the crypto space, but ended up losing their investments due to a lack of understanding of the risks involved in the protocol. We're here to mitigate this. We're qPools Finance, and we're building a new risk-adjusted yield generation protocol on Solana. Our vision at qPools Finance is to build a protocol with both the user and the ecosystem in mind. We want to make earning passive income more accessible to everybody, and we want to provide liquidity to the entire crypto market by connecting the fragmented liquidity caused by the growing number of protocols in the ecosystem. Everybody is interested in generating some passive income, and the rise of DeFi has opened up this avenue to many more people than ever before in human history. While crypto experts were so far able to pick the right protocols for investment and generate some yields, the growing number of protocols is making this decision harder as the days go by, and crypto-neutral people don't even know where to start from, while the skeptics see the entire space as too risky to get involved in.
Our product consists of three pillars. The first one is an easy-to-use front end, designed to be minimalistic and accessible to everyone, even without previous knowledge of cryptocurrencies. The second one is a back-end algorithm which routes the user's liquidity to different platforms. This code has two parts, one that is on-chain that carries all the transactions, price calculations, swapping of coins, and liquidity provided to the different products. The second one is off-chain and computes a portfolio optimization choosing which assets to invest in, taking into account quantities as APY and price volatility. The third one and last one is the listing of the different financial products to invest in. We focus on a list of liquidity pools in decentralized exchanges. At the moment, we are supporting Serum, Saber, and Invariant, but more will come in the future. Now, we are going to show a live example of our solution.
For the web application, we first open up qPools.finance. In the current implementation, users can deposit USDT and receive the QPT token, which are pegged to the distribution of tokens that the protocol owns, as well as the yields that are passively generated. As you can see, we display values such as the total value locked and the total amount of QPT minted on the left. We will also soon display the 7-day APY once we have gathered enough historical data. We can then proceed and convert our USDT to QPT to start generating passive yields. We approve the transaction, and as you can see, the TVL value is updated. These yields are auto-compounding into the QPT token, with which the value of the QPT token should increase according to the portfolio optimization strategy. While we generate some yields, perhaps we can explain how all this logic plays out in the background.
On the backend side, our on-chain program composed with different protocols on the Solana blockchain. Here you see an example transaction of how liquidity is provided to a liquidity pool on Saber. As you can see, our program calls the Saber stable swap program through a CPI call, and then calls the deposit instruction to deposit the funds from the qPools reserve to a liquidity pool on Saber. Our protocol can further perform swaps to have a more diverse portfolio, and this is again implemented through CPI calls to different exchanges such as Saber or Serum. Once there's enough yields, or if the portfolio wants to be rebalanced, a withdraw instruction has to be called to withdraw the funds from the liquidity pool back to the qPools reserve, and this is done through CPI calls again.
Meanwhile, we can see that the total supply of USDT has increased, while the total supply of QPT has stayed constant. This USDT is a reward from the trading fees that was enabled by us providing liquidity to a number of decentralized exchanges. This means that our protocol has generated some yields. You can now redeem the QPT that you had previously received. And as you can see, the total amount of USDT that you received has increased since the initial pay period, about a 9% yield.
The portfolio algorithm is an oracle that is built using the efficient frontier theory. It computes the asset allocation on the financial products that minimizes the volatility against the US dollar. It is an algorithm that first sorts the products according to their APY and chooses from it the list of most profitable investments. Later on, it optimizes for the lowest volatility, providing the best distribution of assets. We can see updated result of this off-chain algorithm and the address where this oracle provides the weights. We have written a white paper where you can find further and more detailed information. Please visit the link that you find on this browser. And don't hesitate to follow us on Twitter, where you can also find the link to our Discord channel to receive fresh updates on our product.